Thank you, everybody. Welcome to the November 24th, 2023 weekly tax update with me. This is the post-Thanksgiving edition, and thank you all for spending some of your day with me. If you're not a subscriber, please consider becoming one. For $52 a month, you get our unlimited CE. If you subscribe now, that'll include a number of programs, including the upcoming artificial intelligence program in tax practice with Mr. Garcia, Hector Garcia, as well as Kathy Morgan's 6 hours of update coming up this in December. Some of our colleagues, our competitors, are running advertisements to save $50 on one class, and I'm thinking rather than save $50 on 2 or 3 credits, about $50 a month gets you 25 to 30 new classes every month. We have some seats available in the tax practice support program. If you need more information, please let us know. AFTR program is up and running, and that's included for subscribers. The exam is available as well. The cutoff is December 31st. You must download the material and pass the exam by December 31st. If you have any questions with this, email Nicole@taxpracticepro.com. If you are not a subscriber or have friends who are not a subscriber, exactly once per year, we have a sale, and that's now. That's this Giving Tuesday weekend, which is today through Black Friday through next Tuesday. You can actually save $101, $99 to join, $52 a month. And of course, you can unsubscribe at any time, but why would you with these prices? Code is available is, where is that code? I may have used the wrong thing, but we have ads running as well. So BFD 50, Black Friday deal 50, BFD 50. Nicole's going to put that up in the chat for you too, up in the sticky area. Join me for the greatest program ever to be written. It's not quite finished. Weird Science, Ethics, and the Misuse of AI. That's coming up this Tuesday, 1 p.m. Eastern. Please join us for 2 free CE in ethics. Hector Garcia joins us November 30th for 2 hours on tax office and artificial intelligence. It's a program he is putting together unique for us. It is not something you will see online. That's one of the benefits of membership, is we can have some of these great speakers put something together that we think is of unique interest to you. In an era where the IRS has stopped unannounced phone calls because of the possibilities of fraud, they still insist on doing some of these things. So there is an IRS survey going on, the Taxpayer Advocate has told us. Between November 27th and January 19th, you may get a random phone call to do a voluntary phone survey. It's not a scam. They'd like you not to hang up. Of course, personally, if they ask for personally identifiable information or anything like that, yes, I would hang up. But otherwise, if it just asks for general information, it's probably legitimate. The survey is conducted by ICF, and that's the firm they've used in the past. The independent research firm that they've hired. It's about a 20-minute survey, which might be a bit lengthy this time of year. We're going to ask questions about e-filing, due diligence, data security, and electronic document submission. Responses are anonymous, confidential. Tax pros will not be asked to provide any PII about themselves or their clients. But of course, they called me. They're recording my stuff. They're going to know my answers. But if you're contacted, it's Monday through Friday between 8:30 and 6:30. You'll see a Kansas City area code. For more information about the survey, you can reach out to tax professional at ICF Survey or call the toll-free number you see there. ICF Survey, of course, is their vendor, not the IRS directly. 1099K, two big things we're going to talk about today, 1099K limits and overall compliance. So 1099K limits again, right? So following feedback from taxpayers, tax pros, payment processors, and to reduce taxpayer confusion, the IRS has released a notice in 2023-74 indicating that we're going to delay of the change, right, to the $20,000 1099K threshold. Now, personally, I think this is coming from the IRS and Treasury, not from any of these mentioned stakeholders, because really this was supposed to be up and running 2 seasons ago. So most of these stakeholders have the systems in place, they've programmed it, and they're ready to go. The government is likely behind this, but for good reason. So as the IRS continues to work on the law, the agency wants to treat 2023 as an additional transition year. This is going to reduce potential confusion from people who don't want to report their income. I don't know. 44 million 1099Ks would have gone out, they estimate, to folks who weren't expecting them and may not otherwise have a tax obligation as a result of them. Well, I blame the tax practitioner community. You should have been telling your clients about this for years. So as a result, reporting will not be required this year unless they get to 20,000 and 200 transactions, right? Which has been the threshold for a number of years. We get all those PayPal surprise businesses, right? You find out that, gee, I've had this business for years, right? This is the first time I got the 1099K. We probably should do a whole class on the surprise business, right? You find out in year 1 because of the 1099K, and what do you do for all those prior years? And you already know what the answer I would give you is, but we could do a class on that. So given the complexity of the new provision, I don't know that it's that complex, the large number of individual taxpayers affected, I agree, and the need for stakeholders to have certainty, the IRS is planning for a threshold of $5,000 during 2024 as part of the phase-in to get to $600. So for 2023, we're going to stay at $600. For next year, we're going to go to $5,000. Then 2025, we're going to revert to the full 20,000 and 200 transactions. And again, this was originally enacted under the American Rescue Plan of 2021, which was that we would go to $600 as the threshold. So following feedback from the community, the IRS is looking to make other updates to Form 1040 and related schedules starting in 2024 that would make the reporting process easier for taxpayers. Now, I've advocated in the past that there should be a Form 1040K or a Schedule K. And what you do is you put every one of your 1099K forms that you receive on it, and you map where the money landed on the income tax return. Certainly that would eliminate some of these CP2000s. One of the options would even be non-taxable, right? Now, of course, some of these TurboTax returns would have some interesting results, but that's something they should think about. If they open up for public comment, I do intend to submit that comment. American Rescue Plan required third-party settlement organizations to drop down to $600, and of course, we're not, right? We're going to stay for this year at 200 transactions and $20,000. So this is a background if you want to take a read about the IRS's history about what was going to be reported. Now, the reporting requirements are not supposed to apply to personal transactions like birthday, holiday gifts, sharing the cost of a car ride or a meal, or paying a family member or another one for a household bill. Casual sale of goods and services, including selling unused personal items like clothing, furniture, and other items at a loss, could generate a Form 1099K for many people. Now, it's interesting. I was expecting a Venmo 1099K this year. I sold my daughter's spare French horn, and it was $800. And the lady wanted to give me a check, and I said, I don't know you from Adam. You're not giving me a check. What about Venmo? Sure. Well, when she sent the Venmo says, is this for goods or services? She said yes. So in addition to I got dinged for a fee, I expected that would be included in my 1099. And in all fairness to her in answering that question, it was in exchange for goods, right? I sold her a French horn. But of course, that's a non-deductible loss, right? Unless I started a marching band as a trade or business. And the IRS seems to think there's complexity here in distinguishing between these types of transactions. In my experience, if you ask somebody, did you make or lose money on the sale of those tickets, for example, which is one of the examples in the IRS. If you go to the 1099K FAQs from last December, they talked about I buy 4 tickets, I sell 2 at a profit, 2 at a loss. How do you report those? My experience is people know if they made money and if they lost money on something as simple as an item I purchased and an item I resold. Put them into a business context with expenses, it starts to get murky, right? So expect more changes here. So we normally don't get into heavy technology issues, but there is an issue out there with Windows 11, which I experienced here. And I give you a link to an article. There's also this link is also in a Word document we uploaded that has all the resources that we're sharing. And this issue, basically, the computer gets stuck in a boot loop. It keeps failing the installation, rebooting, and trying again. So the article talks about what you might want to do and how to resolve it, just in case you see it. Just what we need coming into tax season, right? Artificial intelligence is a hot area, and I have to be honest with you, we're running ads for my ethics class that's coming up and for the Hector Garcia class, and there's all sorts of nasty negative comments from people in our industry that think AI is going to take away their job, destroy the industry, or maybe they've watched too much science fiction. Having been to a few live events, I encounter people who, in my opinion, might be using AI incorrectly. They think that just by saying to the Chat GPT, hi, tell the IRS they're wrong, write me a letter, that somehow that's a good use of AI, and it's not. But we do have some classes that will come up and discuss these issues. But in the meantime, if you want to know more about AI, also on ZDNet, this fellow had taken a number of no and low cost classes, Udemy, Amazon, which I didn't know had courses available. And he rated the free Amazon courses as the most useful. Great courses for beginners and experts. So why not take a look here? There's the link if you want to go and take a look at these otherwise free classes if you have some downtime in December. I don't think it's a bad idea, even if you don't want to use AI and you don't think you want to integrate it into your practice. Your clients are going to ask about it. They're going to ask you about some of the different ways it intersects their business. Take a look at what's out there. Look at the myths, right? So there's two studies out from the General Accountability Office. Normally, we talk about TIGTA studies, right? Treasury Inspector General for Tax Administration. But I saw these two items this week, and I thought they would be of interest to you in an abbreviated program today. The GAO used to be the General Accounting Office. It's an arm of Congress that does research, projections, accountability. In 2004, 20 years ago already, they renamed themselves the Government Accountability Office. So it's still the GAO, but it's the Government Accountability Office. So they are the auditor, evaluator, and investigative arm of Congress. Very similar to what TIGTA does to the IRS and Treasury. Current functions include examining the use of public funds and assessing federal programs and policies. This is how you spent the money. Did you spend it correctly? We told you to do this. Did you do it? What were your results? Where did you screw up, right? Monitoring, just like any other auditor, right? What we told you to do something, how well did you do it or not do it, and what were the results? Same thing, the evaluation looks at policy analysis. This is what you're supposed to do. Are you doing it? Are you getting the results you want? Are your employees doing it incorrectly? Are you violating people's rights? And finally, investigating. If there's an allegation of illegal or improper activity, improper use of funds, improper running of a program, Congress can ask the General Accountability Office to send out some investigators and take a look. Their reports include reports, testimonies, and briefings to Congress, testimony before Congress. They're independent. They operate independently in theory of political party influence. Of course, congressmen can ask for an audit to be done, an investigation to be done. So they're not quite as independent as TIGTA is, my opinion. I might be wrong. They have the authority to examine anything related to the receipt and disbursement of public funds. So they gao.gov is their website. Detailed reports, publications. You can ask them even to send you their report. You can ask them to be on the mailing list and send you reports. So recently they took a look at sole proprietor tax compliance. Now, I don't think this is a coincidence that we have $80 billion from the Inflation Reduction Act. We've given back $22 billion. There's still $58 billion there. And Treasury Secretary Janet Yellen, who seems more and more like a politician some days than others, Secretary Yellen has promised, as if she can make this promise, that the IRS will not increase the number of audits on folks making more than $400,000 a year than they were doing before the pandemic, before the Inflation Reduction Act. So, okay, I don't know how they're going to measure that. I'm sure TIGTA is going to take a look. The GAO is going to take a look. But in the short run, they need to probe where to spend this money. In other words, who under $400,000 is the best place to audit to get the most bang for our buck. So the context of this is they looked at the IRS's handling of sole proprietor compliance. Also, not coincidentally, probably one of the largest recipients as a group of Form 1099-K, sole proprietors. So they want to look at how the IRS addresses underreporting of income by sole proprietors. I will tell you right now from an older TIGTA study, the IRS only goes after 15% of the identified underreporter cases, only 15%. So throwing more 1099-Ks at them, the thinking was we can still only handle the same number of CP2000s and audits. You're just going to lower the percentage by throwing more work at it. Some key takeaways here are that $80 billion in unpaid taxes annually are from sole proprietors. No surprise here. This is 16% of the estimated $496 billion annual tax gap. I found that number to be low. I would have thought that it would have been a third to half. In 2019, 27.8 million sole proprietors filed tax returns. This was 18%, or almost 1 in 5 people. The primary goals of their study were to explore options for the IRS to narrow the tax gap. What's the low-hanging fruit? Where are we going to go if we're going to audit sole proprietors? Evaluate the current IRS methods for assessing the risk of noncompliance. Assess IRS efforts in outreach to improve voluntary compliance. Well, yeah, all right. Let's lock you up. Okay, I'll comply. So what was their methodology? They reviewed the literature and surveyed 25 experts and stakeholders. They analyzed the current IRS tax gap data and statistical information, right, from those green books they issue every year. Examined the IRS documentation and conducted interviews with different IRS agency officials. How did you get to this number? Is this number accurate? Now, why they felt the need to include this, I don't know, but I'm sharing it with you that in this General Accountability Office study, they gave examples of what industries a sole proprietor might be in. My answer would have been it's in all of them, but here you go. All right. So what were their findings? So as of July 2007, right, 16 years ago, Treasury and the IRS had not developed a strategy addressing sole proprietor non-compliance. Well, in that TIGTA study, I could not easily find the slide for you. The numbers are something like 75, if there's no document reporting, 75 or 79% of people fully comply with their tax obligations. If there's reporting, that number shoots into the high 90s. I have this 1099, I have to do something with it. If you add withholding, that number shoots up to like 98 or 99%. If there's withholding, most people will comply. They think they're going to get a refund, right? All right. So, and again, a major part of the tax gap is sole proprietor underreporting. We said 16%. All right. What are some of the options here for improvement? The GAO identified 17 options to enhance tax compliance. But Treasury has no plans to develop a comprehensive tax gap strategy at all, much less for sole proprietors. Very interesting to read between the lines in these reports. So there's an assessment here about the IRS's action and inaction. Now, what's unfair here is this is like during the pandemic when Congress said the IRS really should slow down how quickly those notices come out, right? We give you 30 days to reply. You don't reply. We move you to the next collection. Congress doesn't understand that only Congress can change the law, right? So some of this stuff, Even though GAO is saying it's the IRS, it's not the IRS. The IRS is only enforcing Congress's law. So voluntary withholding. The IRS hasn't implemented voluntary withholding for independent contractors. That was a recommendation of the GAO back in May of 2020 and earlier. Of course, the IRS doesn't have the authority to do that. Lack of voluntary withholding makes tax payments burdensome, potentially reducing compliance. Not only that, I have no reason to file. I'm not going to get a refund if I haven't paid. The IRS strategic plan doesn't specifically target sole proprietor compliance or lack of compliance or making them more compliant. Existing methods to assess non-compliance risks are incomplete and, again, not tailored towards sole proprietors. Now, I'm not an expert here, and this is merely my opinion. My opinion is they're looking to focus, they can only use the Inflation Reduction Act money on folks earning under $400,000 a year. So they are trying to find where are they going to get the most bang for the buck in terms of return on invested money. They are looking here. Are they going to go here? We don't know, but this is where they're looking. But in a world where people, remember, audits are 2 years behind, right? So we're not going to see a large number of itemizers before the 2026 tax returns at the earliest, which would be 2027 or 2028. They're looking for other areas to go. All right. So another GAO study out here. The IRS can improve the use of information returns to enhance compliance. Ooh, okay. Billions of W-2s and other information reporting documents the IRS receives are key to ensuring people correctly pay their taxes. In prior reports, the GAO has recommended ways for the IRS to do a better job. Now they have the money. They should be able to do a better job. So this report was, IRS can improve use of information returns to enhance compliance. I can tell you right now, they need more computing power to process CP2000s. They need more people to answer the phone when those CP2000s are issued. They need more people to handle the paper because more than half of CP2000s currently are at least partially wrong, which means you need a person on the other end to be able to answer the question or to work the case. So some of the fast facts here. Information report returns are filed by third parties, banks, employers, other businesses reporting subcontractor information. This is crucial for identifying mismatches between reported income and actual earnings, which can indicate errors or fraud in the preparation of the return. Billions of W-2s and other forms are key to accurate tax payments or accurate tax returns. In the past, the GAO has recommended the IRS improve their use of these returns to ease taxpayer burden and enhance compliance. And I will tell you that TIGTA says the IRS only works 15% of the cases that they identify. So in other words, they know about 85% of people who have not reported all of their income, and they don't go after them. They can only work 15% of the cases. Terrible numbers. 5 billion forms were reported for 2022. And again, this helps taxpayers do their tax returns, helps the IRS verify self-reported income and of course, self-reported tax. There's issues with underreporting, particularly in areas where we have less third-party reporting. Rental real estate comes into mind, right? Where an individual pays their landlord, right? That doesn't get reported anywhere. So there's no centralized leadership at the IRS in figuring this stuff out. No dedicated leadership for strategic decisions on information returns. So what do we need? A deputy a deputy commissioner for 1099-K? I don't know. Maybe you need some manager or somebody running the program. Examples include AUR and the automated substitute for return programs. Now, of course, the automated substitute for return program hasn't been running since at least March of 2020, and I don't believe they've turned the automated program back on. Certainly, if there's an audit otherwise going on, an agent can produce, can produce an SFR, but the automated SFRs are not being generated. We mentioned the new threshold in our other report, and of course, this has changed, right? So this is in this GAO report that's already outdated, right? That says it's supposed to drop to $600, and it's not going there yet. 2 more years. So what are some of the challenges here? Well, the IRS needs to find a balance between effective information collection and the reporting burdens. My opinion, they need computing power and personnel. They've got the personnel coming. Now they need the computing power. IRS plans, they're building a unified compliance organization and modernizing electronic processing of information returns. Well, part of that, though, has to be the people can't be mailing in paper returns, right? That famous 20 million returns that got trashed during COVID. What everyone fails to understand is they were 20 million information reporting documents, and the IRS's lack of computing power is such that your 2023 1099s that you submit, right? 1099 miscellaneous, 1099 NECs. If the IRS can't get those keyed in by December 31st, 2024, there's no more room in the system. They have to roll it over to next year. There's no more input. That's why they destroyed those 20 million documents. They were so far behind, they didn't get processed. They were just in the way and potentially something that could get stolen or compromised, so they destroyed them. But of course, that doesn't sell newspapers or get links to websites, right? Nobody sells newspapers anymore. Some other recommendations. The IRS should develop a coordination mechanism, expand third-party reporting, and systemically evaluate information returns and adjust the thresholds and analyze 1099-K data. Now, this shows the GAO's own ignorance. The IRS cannot expand third-party reporting on its own or adjust reporting thresholds on its own. That has to come from Congress, including the ability to index some of this reporting, right? That would all be on Congress. But Congress is told, consider uniform information reporting requirements for taxpayers with rental real estate activities. Okay? Interesting. That was today's program, a little bit abbreviated because of the holiday. We will be back next week with a full program. I look forward to seeing you then. Everybody, enjoy the rest of your weekend.